Personal Lines Insurance License Exam. Welcome to the quiz. Which term best describes the principle that prevents an insured from profiting from a loss? Is it A, waiver and estoppel? Or B, subrogation? C, indemnity? Or D, utmost good faith? The answer is C. The principle of indemnity ensures that insurance compensates the insured only for the actual amount of their loss, restoring them to the same financial position they were in before the loss without allowing profit or gain. This prevents insureds from benefiting financially from a claim. Waiver and estoppel relate to the insurer giving up rights or being prevented from denying coverage. Subrogation allows the insurer to recover from a third party after paying a claim. Utmost good faith requires honesty in the application process. Because indemnity limits recovery to the actual loss suffered, it is the principle that stops insureds from profiting. Next question. In property insurance, what does a valued policy law relate to? Is it A, requiring the insurer to pay the full face value of the policy for a total loss from a peril like fire? Or B, allowing the insured to choose their own deductible? C, setting the market value of homes? Or D, determining the actual cash value of personal property? The answer is A. Valued policy laws in some states require that if a property is totally destroyed by a covered peril, such as fire, the insurer must pay the full amount of insurance shown on the policy declarations regardless of the actual cash value or replacement cost. This simplifies claims for total losses. Deductibles are separate. Market value is not set by law this way. ACV applies in other cases. Because valued policy laws mandate full face amount payment for total losses, this is their effect. Next question. An HO4 tenants policy provides coverage for which of the following? Is it A, the apartment building itself? Or B, the tenant's personal property and liability, but not the dwelling structure? C, both the tenant's belongings and improvements made to the apartment? Or D, only liability arising from the tenant's occupancy? The answer is B. An HO for tenants or renters policy covers the tenant's personal property against named perils and provides personal liability protection, but does not cover the building structure or dwelling, which is the landlord's responsibility. Building coverage is for owners. Improvements may be covered under some policies, but not standard. Liability only ignores property. Because HO4 protects renters' belongings and liability without the structure, this is what it provides. Next question. In a homeowner's policy, what does coverage typically insure? Is it A, the insured's personal property worldwide? Or B, additional living expenses after a loss? C, the dwelling structure at the location listed? Or D, personal liability for injuries to others? The answer is C. Coverage A in a standard homeowner's insurance policy is dedicated to protecting the main dwelling building, including attached structures, such as garages or porches at the specific address listed on the policy. It pays to repair or rebuild the home itself when damaged by a covered peril like fire, lightning, or windstorm. Personal property such as furniture, clothing, and appliances is covered under coverage C, not A, and is not limited to worldwide, but has standard limits. Additional living expenses, which help pay for hotel stays or meals when the home is uninhabitable, fall under coverage D. Personal liability for injuries or property damage caused to others is handled by coverage E. Coverage A always focuses specifically on the dwelling structure at the listed location, making the other choices apply to entirely different coverages in the policy. Next question. A home business endorsement, often CPC 0913, is necessary because a standard homeowner's policy does what regarding business activities? Is it A, provides full liability and property coverage for all in-home businesses? Or B, provides very limited coverage for business property and no liability for business activities? C, requires an additional premium for any computer used at home? Or D, excludes coverage for any professional books or tools? The answer is B. A standard homeowner's policy provides only very limited coverage for business property, usually a small amount like $2,500 on premises and much less off-premises, and completely excludes business liability for activities or injuries related to business operations, so a home business endorsement is needed to add appropriate property and liability protection. Full coverage is not provided. Computer premiums are unrelated. Professional books or tools may have limits, but not total exclusion. Because standard policies limit business coverage severely, this requires an endorsement. Next question. Which of the following best describes peril in an insurance context? Is it A, the cause of a possible loss, such as fire or theft? Or B, the person or property facing a potential loss? C, the condition that increases the chance of a loss? Or D, the financial loss that occurs? The answer is A. In insurance, a peril is the actual cause or event that leads to a loss, such as fire, lightning, windstorm, theft, vandalism, or water damage. Policies either name specific perils that are covered or use open perils language that covers all causes except excluded ones. The person or property exposed to loss is the subject or risk, not the peril. A condition that increases the chance of loss is a hazard. The financial loss itself is the result or damage, not the peril. Because perils are the named or potential causes of damage, this definition matches the standard insurance usage. That's it for today. Don't forget to like and subscribe. Tell us how many you scored out of 6 in the comments, and let me know what topic I should post next. Bye.